Hello, everyone, and welcome to today's NinjaTrader Ecosystem webinar event with Raul Jimenez of iCinDER. My name is Chris, and I am a platform support representative for NinjaTrader. We do have a very special event today with Raul Jimenez of iCinDER. I would like to mention that it is important to understand that there are substantial risks of trading commodity futures and foreign currency. You should carefully consider whether such trading is suitable for you, and this will depend on your specific circumstance and financial resources. It is possible to lose all the funds deposited with your broker, and you could even incur losses beyond these amounts. Please inquire at brokerage support@ninjatrader.com for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply educational in nature. And this webinar is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team at the email that I posted into the room or the phone number that I'm posting into the room now. The NinjaTrader ecosystem is home to hundreds of third-party apps, add-ons, as well as educational services, all centered around the NinjaTrader platform, with new tools and services added to the site nearly every week. You can quickly search keywords or filter by trading methodology, asset class, and more. You'll also find information about upcoming webinars and on-demand video archive where you can find event recordings. So here's a link to the NinjaTrader ecosystem website. For up-to-date information about the NinjaTrader ecosystem, be sure to follow us on social media. So here are links to Twitter and Facebook. And NinjaTrader is a free application for advanced charting, strategy backtesting, and trade simulation. So if you're not yet using NinjaTrader, I would invite you to download NinjaTrader for free at the following link. And you can also use that link to request a free live market data trial for either futures or Forex markets. We are very excited for today's unique webinar event in which Raul Jimenez of iCinDER will explain his simplified technical analysis concepts. Thank you all very much for attending today. And without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Raul Jimenez. Raul, you can take it away now.
Thank you. This is Raul Jimenez with iCinDER. I'm the Chief Technology Officer Programmer for iCinDER. Please notice the CFTC Rule 441, which is hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general also are subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve similar results to those shown. The disclaimer also here, risk disclosure, the iCinDER tools, they're indicators that should not be used solely or as replacement for your current tool set. All projections are hypothetical and are only used for educational purposes. The family of tools being shown is in addition to those that you may already be using and can provide additional information during your technical analysis of financial instruments. A little bit about me. I have been a developer of software since the early 1980s. And one of the things that is key in this is developing tools that visualize basically market movement and volatility, velocity, in a way that facilitates quicker analysis. I'm a day trader, and I have been doing that since 2006. I hold degrees in computer information systems and business administration, and I was an accountant for probably about 12 years before I went deeper into technology. So the methodology that is used for iCinDER trader algorithms is measuring cycles, velocity, trend direction, and market strength. The tools were developed in 2006 So now it's been 14 years that we've been using these tools, and many of you are my customers at this time. So what we do is we extract the fractals of cycles and fractals of velocity, and with those cycles, we can actually have a relative accurate direction of a trend in the market. So the tools are basically created to execute a complex analysis and yet provide you with simple information that makes it easy to create an analysis. So with that, let's talk about the agenda for today. As part of the agenda, we're going to do market analysis, or at least show through that, and overview of order flow. The two systems tied together. And when we talk about, or when I talk about market analysis, I am going from the direction of looking at volume. Volume is the force that moves price. So generally when we look at any chart, we usually want to analyze what? We analyze volume, and we looked at market movement of by using whatever bar type we decide to use. And that allows us to look at, volatility, look at movement of price, the speed at which it's moving, and so on. And those are the things that on the chart that has very little information, we can look at those two dimensions. There are more dimensions to that, because when you start looking at cycles can transpire at different time frames. In other words, you can take something, the movement of price, and dissect it. Let's take, for example, it may be minutes, and you may say, okay, 3 minutes, 5, 10, 15, and so on. And you run indicators that will tell you what is happening in each of those time frames. So that multi-dimensional view can be shown by extracting the information as to cycles. And the speed at which a cycle moves will imply velocity. Now, to continue with that, what we do also is we attempt to manage the levels. So look at market forces and look at confluence. Where is there a likelihood of price with high volume appearing at a specific price level? And a tool has been developed for that. This now is about 2.5 years old, and it's used, and it gives you a relative good idea as to where are the levels at which price may stop on the movement to the top side, which would be basically resistance. And it can also show, as price moves down, a support level. Now, what we're going to do, we're going to look at qualifying factors. And there are actually 9 qualifying factors. And I'm going to show you how you can take the qualifying factors, which are actually complex and deep in the multidimensional analysis that they're doing. And yet taking those 9 factors and providing you with a single output. So we can actually simplify the chart and have quicker response to market movement. And that's what we want, because we want to be able to react to the movement of price quickly so we can take the trade and not lose out, because if it takes too long to analyze something, by the time you enter into the trade is gone. The train has left the station. The indicators on the chart, of course, there are going to be a number of them. And we're going to look at one that's a paint bar, which is a quick analysis of those 9 qualifying factors. We're looking at cycles. We're looking at divergence. And we're going to look at order flow, market profile, and volumetric bars. What does that do for us? Well, the volumetric bars help us to manage the trade once we are in, because we want to know who is in charge of the market at a specific time, so we know where there's force moving up or weakness pushing price down. And market profile gives us the daily view as to where the highest amount of volume executed at specific price levels. So those are key things that help us to basically, as we analyze things, to know whether we should enter into a trade or not. It's just one of the other factors we analyze. The other thing, confluence. And confluence, let's define it as high price levels. In other words, high volume at a price level that executed historically, and those become levels at which price can stop due to either resistance or support. We're going to have a couple of sample charts, and those sample charts will help to basically clarify all this for you. One more thing here. When I talk about analysis, I'm talking generally about two things. One of them is a complex analysis. And a complex analysis, if you look at the chart that I'm showing right here, you have a lot of indicators in there. So basically, if you were to take all those indicators, okay, are the bars green? Are the bars red? Where are those little yellow lines? What do they mean? Those are confluence levels. Well, what is the divergence telling us? Is it high divergence now, or is it acting in confluence as far as price and cycle moving together? And the other one is like a little heat map, which is basically a convolution or compilation of the 9 qualifying factors. And then we have a cycle and we have volume there. So we have a lot of information. So if you were to count through there, you actually, by the time you react to all those indicators there, you basically, it'd be too late for you, because you have at least 9 items that you're actually looking at when you're looking at a chart like this. So the goal is this. We want to have simple chart where we can have simple analysis steps that we take. And we take the tools that we have, simplify the chart, and now when we look at it, we can quickly react. And we can see certain things, like where's price likely to go, where is the resistance, where's the support. So what can we do then? We react faster to movement in the market, and we are able to take trades more efficiently. So now let's just jump right to a demo, because we talked a lot about basically theoretical systems and how the algorithms are used, how they work, how they likely should be used. So let's jump to a demo. And now we're actually going to look at the markets. Okay, here we go. I want to maximize this. And what I'm showing you is a complex analysis. And what we have is we have cycle levels. And those are here, we have 3. We have a minor cycle, an intermediate cycle, and a major cycle, 3 items, right? Then we have the confluence levels. That's item number 4. Then we have price movement. That's 5 items that we got to look at, right? So we have, is any more complex? We have a tool that's looking at divergence. When price is moving in accordance to a cycle, it's got a low value. When it goes to a high value, it's likely of divergence to take place, and cycle and price will not move in agreement. The next thing that we have here is a single tool. And really, this one has debug showing, and these are the qualifying factors. And whether they're actually negative or positive, they give us an idea as to what's happening in the market, right? And with prices moving. Next, this is why I said the things can be complex. This is the cycle again, 3 of them, minor, intermediate, and major, looking at velocity and movement of velocity. And you would be looking at analysis at what is the slope of velocity for the minor cycle, up or down, by intermediate cycle, major cycle. So it's complex. And then last, I like to look at volume, because that's, again, I've mentioned volume is extremely important. And so I have here volume, and I'm looking at whether or not it's in accordance to a balanced level, or it's breaking out, thrust bars, and so on. So those are the things that we'll look at. Now, what are the qualifying factors? And then I say, okay, we're going to take one tool that looks at all these qualifying factors. The minor, intermediate, and major cycles. What is the slope? In other words, are they moving in a positive manner or a negative manner? Which way are they pointing? The other thing is we're looking at the slope of the point of controls. There are the three different levels. Now, those three levels, again, we're looking at the slope, whether we're having or exhibiting point of control that is positive or point of control that is negative. In other words, the slope. If it is positive, it implies that there's more buying in the market. There's enthusiasm. There's belief that price is going to rise. If it's going low, then it says, okay, price is likely to go low. Now we look at that, and I'm going to move this arrow here for a second just to show you what's taking place. The relationship, and this is qualifying factor 7, 8, and 9. The relationship of the point of control in each of these bars to the minor, the intermediate, and major cycles. And these major cycles are looking at internal market forces. They're not looking at velocity, but at market forces. So as you can see now, the model has become more complex. And as we have this model that becomes more complex, reaction times becomes slower. So let's look at what I would call a simplex model. And I'm going to delete some things. Okay, do I need to look at the cycle? And I'm just going to delete. No, I don't need to look at the cycle because that's being analyzed by the XP9 paint bar. Now, the XP9 paint bar, do I need to see all those dots? Well, not necessarily. I don't really need to look at that, right? So I'm going to turn debug off. So what we're doing is we're simplifying the analysis now. So now we just have something that is going to paint the bars for us, which you see on the top. We're going to look at divergence. When it's low, like we have in this area right here, price and cycle are moving together. So you are looking for areas where there's a low number or continuance of low numbers, where price and cycle are moving together. So now let's, the next thing is I'm going to simplify this by clicking over here. Looking at three lines and the relationship of three lines is hard. So let's just go ahead and say, okay, let's put some shading there. So now we're going to get some shading. Notice now that green is above. In other words, that it tells you which way the cycle is going. We have positive cycle, weakness on the cycle, and the cycle in certain areas becomes flattened right here. And there's another thrust. Now what is taking place is the qualifying factors, those 9 qualifying factors that I mentioned are being analyzed. If they're all in agreement, you get a green bar. If there's weakness in any of them, you get a yellow bar. So those are like warning. Then green again, and so on. So let's go and look at a specific time frame. So here's the qualifying factors again. You know that they're being measured. The other thing that you're looking at any point when you see a green marker, in other words, the bar is painted green, it's a bullish bias. A relationship of that to the shaded area is telling you whether actually there may be a movement or not. The other factors that you look, because you're going to analyze 3 things. You're going to basically look at the color of the bars, 1. Number 2, you're going to look at the yellow lines, which are support. If they're below price, they're support. If they're above price, like here, is resistance. Then after that, you're going to look, this is the third item you have to look at, the divergence, to see whether it's in that light area of blue. So in essence, you simplified your analysis. Now, when you see a thrust bar, and here's one, where do you think price is going to go? And that's where divergence comes in. Oh, sorry, the confluence tool comes in. At this level here, there's a bar. your entry more than likely will be in the next level right here. And then you figure out, well, where is it likely to go? And the highest probability as to where it will move is going to be here. That's T1 and T2. The lines are dynamic. By the time that you get to this level right here, in other words, right at this bar area, resistance has been painted up here. If you decide to stay in that trade for whatever reason, then you know this is actually noise. It's going sideways. Cycle was moving downward. The green is below, telling you that's a negative bias. This resistance, then target becomes T2 right here. That's a target. And next to that, should it continue, there's a third target. Now, you may ask, how do we develop the confluence levels? And I'm going to just kind of wrap around and look at that. They're looking at the point of control and the volume weighted average price. It is loading minute bars. And in this particular case, it's looking at 60 days. And I'm looking at a default time frame. The sensitivity is managed by the default time frame. So now let us say that I want more lines. I want to know more, a little bit more as to where there may be other resistance levels and support levels. So I click on apply. And now we have a few other lines there. The other thing is, if you want to look at a longer time frame, you can actually change the 120 days. It calculates relatively fast. And those are the levels looking at 120 days back. Since we're day trading, right? Looking at basically 60 days, 35 days is more than ample. I usually leave it at 60 and I leave it on default. So the question would be at this point, to you that are watching this webinar, is it simpler to look at basically three things that you're going to look at? And once you do an analysis as to entry, and let's pick an area. And let's say that over here, I see the red bar. I say, okay, I'm going to enter that trade. What am I going to do? Always look below. If it's a short, look below, and that would be your likely target. Historically, price was very strong at that level. Now, if we look, when was it strong? It was actually strong here about 9:47 a.m. historically from what has taken place. And as it progressed, it became a little bit weaker. Now, when it crosses through, it fails. In other words, that line won't draw anymore. So then the next level that you have now, if price continues downward, it's going to be here. If at this point right here, if price was to rise, it's going to be, this was a one that was valid. As we go into more, more bars execute, then you see now that becomes resistance. Then now we have a higher level as to where price could go. So this is all been calculated dynamically. Now let's kind of look at the end of the day, because the end of the day was actually very interesting. There's another relationship that we kind of look at. It's visually is easy to do because either the lines are separated, the shaded area, or the shaded area is nice and tight right here. The implication is the sideways movement hitting resistance at this level right here. Now, the other thing you can do, and I keep on adding things for you because it's supposed to make it easy to analyze. So if I want, let's see, this is Confluence. Price markers. I had to take it to the end of the data. But then you see the levels right there, and you see markers, 91.10. After this breakout right here, which occurred at 1533, and price moved up at 1533, should price move downward, the support level is right here, and that was support as that move took place. Now, you didn't have any markers to the top side, so what's generally done is you use a Fibonacci retracement, and you will look from at the breakout area from that level to the next previous level. And so at that point, that breakout, the first level was at let's see, 91.1630. It extended way beyond that. So what you can do then is you say, okay, the next level, support 2. On support 2, the target would be 91.22. If you look at support 3, then you see where the likelihood of price going to, it was like 91.32. So when you don't have targets on the top side, by using the support levels and extending fib lines, you can actually see where the likelihood of targets are on the top side. So when I mentioned the move that we had here, and price was tight, right? So the first level that you actually ended up having is signal. The signal occurred right at this level. And that signal occurred at 1330. T1, T2 became resistance, T3. So all those levels were hit. Now, if you want to ask me why, well, the answer why is because historically those were levels of price at which high amount of volume executed. So basically, the traders had a belief that that is where value was for this specific instrument. More than that, as we talk about managing, so managing the trade, we always look, and we've covered this on the follow-up webinar also, using the volumetric bars to see who is in charge, whether you have higher numbers on the left or the right, and you're looking at the deltas and additional information. I also look at whether we have inside days, and this is actually using 30-minute and daily profiles. And daily profile was 60 minutes. And I looked at 3 days to see in reference to 3 days where are we trading. As we go through the analysis, this is the key thing that you cover every day in the morning, and you may look at week, and you will look at daily. What does that do for us? It will help us to prepare for where price is likely to go, and therefore trade more efficiently as we go back to a simple model and trade off with it. Let's go ahead and go back to the presentation. This has covered the demo, and we should have some time for questions and answers. So the promotion that we have and the tools that I've shown here are in iCinDER Trader's Trend Guide Pack. It's a trading suite. It includes internal market forces, cycles, the Confluence internal market force tool, the XP2, actually it's XP9 Divergence tool, and Trend Guide XP9. In other words, those 9 qualifying factors producing a paint bar. So it gives you, by looking at the bars themselves, you can have an idea as to where price is likely to be moving, either with strength based on those qualifying factors or weakness based on those qualifying factors. The workspace for the presentation that you see will be provided, and 3 support training webinars. I actually extended that to 5 today because I want to cover a little bit more on order flow. On top of that, what you get is 2 90-minute private lessons. One-on-one, not a group lesson, but actually talking about your needs, your trading style, what you would be expecting the tool to do, and also finding out a periodicity. So we're actually looking at volume, and one of the things that is included with this is the periodicity guide, which is calculated monthly, and it gives us levels. You know, there's volume levels, a volume number that we plug into our charts, basically our volume force chart or our volume chart. And that is looking at the volatility of the markets and trying to match our trading style to the closest that we can get to that volatility level and trade efficiently. The bundle price with the bonus items is $1,830, and now it is available for $1,189. So that's a 35% discount, and you save $641. Now, if you just want to buy the whole shebang, everything that I have, that is regularly $2,230, and it's going to go for $1,449, and that will have not only what we covered today, but additional indicators that will, as we go through all the lessons and so on, and the private lessons, how to trade daily, stay trading, how to hold positions, how to do swing trading. So all those things are covered, and the tools covered those 3 type of trading styles. What was used in the presentation was volume force bars, order flow volume profile, and AMA better volume. So those are the indicators that have been used in the charts. Other than that, if you need to contact me, you can contact me at support@iCinDERtrader.com. At this point, if there are questions that need to be asked, why don't we go ahead and go over those questions? Tim asked, are there tools within the suite of indicators which shows the current activity of the institutions or big boys? No, there are no such tools there, but it is implied by looking at the point of control and volume levels of point of controls. And where they were historically is assessed by the Confluence tool, where they're likely to move to the, let's say, to the top side, a breakout and so on, that can be ascertained by using Fibonacci levels. Any other questions? The other thing that I like to, I'm going to post this over here. There's a follow-up webinar, which I will go deeper into the tools and actually looking at the live market, because sometimes just looking at charts after the market closes is, in other words, we're looking after the fact. Things become extremely easy to make analysis and say where things were supposed to go and so on. So I actually posted the link for the follow-up webinar tomorrow. If you're interested in the tools, you're interested more in learning, interested in that one-on-one interaction with me on how to use the tools, how to look at the specific, in other words, if you're doing swing trading, we're going to look at things in a different manner. If you're taking positions, there is one specific workspace that actually allows you to use the Confluence levels with daily profiles showing you where the levels for support and resistance are. So those are things that we can look at and make you more efficient in your analysis and the trading. If there are no other questions at this point, um, number one, I'd like to thank you all for attending. And secondly, NinjaTrader for allowing me to present to the customer base, which is something that I use all the time, NinjaTrader for my tool for analysis and trading. So thank you. At this point, I turn it back to Ninja.
And of course, a special thank you as well to RJ Jimenez from iCinDER for a great presentation today. Everyone in attendance of today's event will receive an on-demand recording of the presentation, so keep an eye out in your email for information about the recording of today's event. NinjaTrader is pleased to sponsor these weekly webinars as a value-adding service for our clients. If you do see value in these events, we hope that you attend them on a regular basis. A schedule of upcoming webinars as well as an archive of historical events can be found at the following link to the NinjaTrader ecosystem website. And we would like to remind everyone that the information provided in today's event was that of iCinDER and not that of NinjaTrader. All of the information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time that you spent with us today. Enjoy the rest of your day, and we hope to see you again in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.